Should we take our cue from this? This is a chart of Texas Instruments, the huge semiconductor company. Last night, it reported a hideous shortfall, shaded down its forecast, and it sent the stock tumbling 7.5%. Now, you got to wonder if this is a sign for the rest of the chip makers, right? Could Texas Instruments be another, say, Workday, which recently issued some cautious commentary and sparked a monster sell-off in the cloud cohort? A lot of experts are claiming this company is a real bellwether. Texas Instruments is indeed a $111 billion company with across-the-board exposure to the semiconductor industry. If they're in bad shape, then everybody else must be suffering too, right? Or at least that's what they'd have you believe. On last night's dismal conference call, management kept hammering home that it's all about the macro, the pessimism, the trade war, which came together to make the company's weary customers more cautious. At first, the market bought this one hook, line, and sinker. The semiconductor stocks all rolled over in after-hours trading. But today, many of these stocks shrugged off this company's shortfall and rebounded from the lows. I think that comeback made a lot of sense. And like I said at the top of the show, some of the things that seem unfathomable just aren't explained well enough. Of course, we can't just dismiss what this company's had to say last night. It's a gigantic company, $15 billion in sales. Their worldview does matter. But, and this is a big but, Sir Mix-a-Lot but, going into the quarter, Texas Instruments had been an incredible performer. It was up 36% for the year. And when you look at the reasons for that strength, it's because the company did everything in its power to stop being a semiconductor bellwether. As Eric Johnson points out in a fantastic piece for TheStreet.com, Texas Instruments was a winner because it moved aggressively to get off the treadmill of cell phone components. Although it still has some in here, it's no longer the be-all and end-all. Instead, they diversified in automobiles. They're one of the dominant chip makers for the auto industry. They diversified into industrial automation. Think the digitization of manufacturing. So Texas Instruments has made itself into a lot more cyclical company than the average chip maker. For years, this was a brilliant strategy because cell phone sales were slowing and the industrial economy was just fine. But that's no longer the case. If we're headed into a worldwide economic slowdown, as many indicators seem, these are the last businesses you want exposure to. Bad end markets. Texas Instruments is levered to what's uniquely not working. These days, I think we have better tells for vast swaths of the semiconductor industry. I want you to consider a company like Taiwan Semiconductor. Last week, this gargantuan chip maker told us they were seeing real strength across pretty much each product line. Taiwan Semi is more than twice the size of Texas Instruments. Their communications business is on fire right now, as is their DRAM, let's just call it their commodity semi business. Or how about last night when a very good test and measurement company, Teradyne, told us a tale of tremendous strength, particularly ongoing demand for 5G infrastructure and flash memory. Lam Research, the huge semiconductor equipment manufacturer, went into total beast mode this very evening, reporting a quarter that sent the stock soaring a dozen points in after hours. Meanwhile, we have plenty of chip makers that have nothing to do with Texas Instruments. Nvidia stock got hammered last night, but then it came back hard today because Nvidia is levered to totally different end markets that are in much better shape. Plus, it's led by the incomparable Jensen Huang, who just this week was named the best performing CEO by HBR Magazine. We saw the same thing with AMD and Micron. They got hit hard, and then they rebounded today because there's simply not much overlap with Texas Instruments. After plunging as much as Texas Instruments did in the after hours, let's say AMD stock ended up losing just 15 cents. Micron stock closed flat. Listen, all semiconductor companies are not created equal. Some are more equal than others. Right now, the winners are the ones with less industrial exposure because we're going into a worldwide slowdown. The moral of the story, you don't run from an AMD or an Nvidia if Texas Instruments says business is weakening across the board. You run to them because they don't have the same customers. As far as these less cyclical semis are concerned, business is fine. And just maybe, as in the case with LRCX, Lam Research this evening, maybe it's much better than we ever thought. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.